In today's video, we are going to talk about 1035 exchanges. What is a 1035 exchange? How does it work? Does it make sense for you if you have a high cash value life insurance policy? Let's get on into it and have some fun talking about cash value life insurance. So first and foremost, what is a 1035 exchange? A 1035 exchange is a transfer of cash value from one life insurance policy to another life insurance policy. The transfer is a tax-free exchange. So for example, if I have $100,000 in cash value with company A, I've got a policy with them, and I like a different company with a different product. I say, you know what? I'm not happy with my old policy. I'd like to transfer it over. The definition of this would be a 1035 exchange. I'm transferring the cash value over, and that transaction is tax-free. Now, if the existing policy is a MEC already, a modified endowment contract, when I transfer that over, the new policy will be a MEC. So that question sometimes comes up. Can I get out of a MEC by just transferring that MEC policy to a non-MEC policy? The answer is no, unfortunately. A 1035 exchange works when it is a life insurance policy to a new life insurance policy. A 1035 exchange can also be executed if I have a life insurance policy and I'm transferring the cash value to an annuity. We don't do that a whole lot with our practice, but it is possible. In some cases, it does make sense, but it is possible, and that will be a tax-free transfer. So tax-free or 1035 exchange is a tax-free transfer of cash value from one policy to another policy. Does it make sense for you? This is the big question, and the answer is maybe. Really, what has to be done whenever a 1035 exchange is on the table, if you're considering it, an analysis has to be done, and it has to go beyond just looking at, here's my policy currently, and here's what it looks like if I transfer it into a new policy. Because I can almost always make a case from an illustrative standpoint, meaning I can show you an illustration and say, hey, you've got a lot more money with this new option, especially long-term. But the thing is, when I look at projections, it's easy to make sense of it that way, to say, hey, we can upgrade your policy. Let's transfer it to a new one. But reality tells a much, much different story. You have to take several steps really as the agent. If you're a consumer, so if you're working with someone and you're considering a 1035 exchange, knowing what questions to ask, what to look for, will really, really help you with this. When people reach out to us about 1035 exchanges, when people have reached out to me, I will kind of slow them down and say, hey, let's look at the policy first. I need a lot of information first to make sure that this is actually in your best interest. Because if it's not, I'm going to tell you that it's not. There's been times people have had 7 figures, a lot of cash value in a number of policies. One case I recall was about $2 million he had in 3 different policies. And they were several years old. They were with a smaller mutual company, not one of the major mutuals. We looked at it, or I looked at it and said, it doesn't make sense. Those policies are too old. You've got a higher guaranteed rate at 4%. The new products don't offer that. We looked at the design of the existing policies, like it doesn't make sense. And that was my recommendation not to do it. Now, I could have made a case by looking at some new illustrations to say, hey, look at these values over here, and try and manipulate the software to make it look better. That's not right, in my opinion. So, points to consider here. Old policy. What insurance company is it with, and how was the policy designed? Company selection, policy design is typically what I look at. New policy, company selection, and policy design. The design is very, very important here, and you're going to see this not so much in this video, but in the next couple of videos when we look at different case studies, you'll see where the design is so important. I want to add something here too when it comes to company selection. I'll frequently talk about the 4 major mutual companies having consistently delivered the strongest actual cash values to policyholders. Real performance, not just good-looking projections. Does that mean if you have a policy with a small company, oh man, I found out that I could potentially have more money with a different company, I should just 1035 exchange it? No, not at all. Similar to the story that I shared earlier, if you've got a policy and it's beyond the first 2 years, meaning it's more than 2 years old, and especially if it was well designed, a lot of times it doesn't make sense to 1035 exchange it, especially if you can make changes with that existing policy. A lot of times people are not aware of this. In our next video, we're going to look at a case where we actually examined a number of changes first. What can we do to improve the existing policy? creating that I didn't know I could change the death benefit and premium on my existing policy, therefore not have to go through new expenses with a new policy. So it's good just to know what steps can I take with an existing company, with an existing policy before just abandoning ship, which would be a 1035 exchange. So to get back on track here, we want to look at the old policy, company selection, policy design, the new policy as well, compare them side by side, look at the guarantees. This is what no one wants to show. Look at the guarantees. Because what you'll see very often when these cases occur, when it's easy to say, hey, a 1035 exchange makes sense because you'll have more money long term. You might see that on the non-guaranteed side of an illustration, meaning when I compare the new and the old, the new one with a 1035 exchange looks better, but then the guarantees tell the opposite. It's not even close. Then we want to look at actual performance too. My point here is this will give you a nice worst case scenario to be aware of. And if you get resistance, someone doesn't want to show it, pry, right? Make sure you continue to ask because it is your money going into a policy. We do not want to find out that reality was different than what we saw. And now we're like, great, like it didn't make sense. And I lost more money as a result trying to fix a problem I thought I had, but after the fact realized it wasn't a problem. I got myself into a worse situation. Look at the guarantees. We're going to look at that very intensely in our next video. In a couple steps, we'll take it a couple steps further. 1035 exchange. You can transfer cash value from an existing whole life insurance policy to a new whole life policy, to an IUL, to a VUL. Any cash value life insurance product, you can transfer the cash value from the old policy to a new policy. What's very important to be aware of here, though, is if we have a universal life policy, say it's an IUL and it has surrender fees attached, let's say you're 5 years into it, you're looking at it, you say, hey, it doesn't make sense, I want a 1035 exchange it, maybe the numbers even make sense. The surrender value is what's transferred, not the accumulation value. So often, if I'm in a policy that has surrender fees, which you typically will never see with whole life, it will typically be with universal life products, if it's got a surrender fee attached to it, it's usually the surrender value that gets transferred. So I'm locked in until that surrender fee has expired, or if I just want to eat it, which that's hard to do. Like I don't like doing that unless you can actually justify it with numbers and data. But you can transfer cash value from any life insurance product to another cash value life insurance product. Another reason or another point to consider and why some people are attracted to 1035 exchanging an existing policy to another company often has to do with PUA flexibility. If I have a policy where I'm paying in, let's call it $100,000 per year every single year and it's a bill, and then I find out I can have a policy where I can pay the same $100,000 in, but I'm only committed to $10,000, I can commit to the 10K, and I can pay $100K each year, or I can pay just the 10 and add more funds at my discretion. A lot of people, particularly business owners, real estate investors, or people that see their cash flow fluctuate, are really attracted to that type of design. And they usually end up max funding the policy, but it's at their discretion instead of receiving a bill for it each year. So learning more, call it rules, what's available and what's not available with different insurance companies around that PUA rider can sometimes add some additional benefits or reason as to why a 1035 exchange will make sense. That's more of the added benefit. I still like to really focus on the numbers because we don't want to fall for a trick here. And a trick, I'm not saying an agent's going to deliberately trick you or anything like that. A lot of times it's just digging deeper by looking at the guaranteed values, actual performance, real data, all that stuff. So what to ask for as a policy holder if you're looking at a 1035 exchange. So you want to ask your agent this, or your agent wants to be asking these questions for you, providing that awareness. Current values, which if you're looking at a whole life insurance product is based on the company's present dividend rate. Good to look at both with the old policy and a new policy. Look at the two side by side. Next, guaranteed values, both with the old product and the new product. Now, sometimes you'll have to take extra steps here because the guaranteed values, if I take the tabular details or tabular values of a life insurance illustration, that will show guaranteed values, but they're not accurate. If I've got a term rider, it often assumes it's never cut. It assumes I make premium payments forever. With some companies is how the tabular values work. So I want to make sure I have the true custom guaranteed values, meaning if you said I want to pay into this for 10 years, and the new policy I want to pay into for 10 years. Maybe I've already made 2 payments with the existing one, so show me fulfilling my payments for 10 years compared to a new policy where I pay the same dollar amount in, but only for 8 years with the transfer. Doesn't make sense when I look at everything side by side based on the guarantees. That's what we want to look at, and that's what we will look at in the next video. We'll have a lot of fun with that. On that, or similar to that point, looking at the break-even point carefully. So when I say carefully, what we want to do is see what is the break-even point with a new policy, or we're looking at a 1035 exchange. And then also what's the break-even point if we factor in the payments we've made to that old policy. Because I already dished money out. And if I'm looking at a 1035 exchange, if it's before the break-even of the existing policy I have, if it's not a very old policy, I'm going to take a hit there up front. So I want to see what's my true out-of-pocket just collectively that's been paid into life insurance policies. Transparency, if we want to call it that. There we go. Transparency can help make an informed decision and prevent buyer's remorse. Very important here. So what we're going to look at in the next 2 videos are unique cases, but everyone has a unique situation. What we'll look at first is a couple in their early 40s who have a whole life insurance product with one of the major mutual companies. We're going to touch on the design with that old product and then what they're considering with the new product. This was actually a case where we took our time, and as we compare it to the 1035 exchange, as of the day of shooting this video, we're still comparing it. We have not made the decision to execute yet. And the reason why is we want to exhaust all options with the existing policy. We're saying, hey, if we keep it but reduce our premium, increase our premium, restructure the design because the company they have will allow that, can we salvage what we've paid in and see more monetary value with the existing policy before the 1035 exchange? A lot of nitty-gritty stuff. You'll see it in the next video, which one gives me more money. It'll simplify things. So that one was a lot of fun, just digging into everything, and it helped or is helping the couple make the best decision. And then the second case will be a male in their mid-50s who started a policy 25 years ago. I think it was a little bit longer than that actually. And it was a VUL, Variable Universal Life Insurance policy. Now he's older in his 50s. So he's gotten older. What happens with universal life policies as we grow older? The expenses go up. However, every case is unique. With that particular case, he's got a fixed account available at 4%. And we're going to look at the guarantees along with the guaranteed maximum expenses and see, does it really make sense for you based on what you're trying to do, even though it's a universal life insurance policy? So the analysis is what is very, very important here. It helps remove emotion from the decision, because typically, speaking personally, when I make emotional decisions sometimes, when I have not looked at the data, that's where buyer's remorse comes in. Not all the time. If I trust the person that I'm working with and they treat the situation the same way I would be treated, like I can trust them, they're not going to do anything or overlook something, then it usually works out well. But that's me just talking about business and decision-making process in general. Hope this video was informative regarding 1035 exchanges. If you enjoyed it, please hit the like button, subscribe for more. Leave any questions in the comments below, if you'd like to see any particular case studies. And I hope this helps. Thanks so much. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.